Welcome, everybody. My name is Rodney.
I'm Candace.
And we're cohort
1986.
We're back on our mentor series.
Yes.
Today we have a special guest, Mr. Mitchell Gatewood.
Yes.
Let's give him a round of applause.
I feel like we need some kind of cool introduction or cool table or something.
Okay, let me see. Let me try it.
What?
I've known Mitchell for over a decade. He's a dynamic financial. Okay.
Maybe next time.
Maybe next time. So I'm gonna just read. a short blurb about Mitch.
Okay.
He's a financial advisor with 12 plus years of experience delivering financial investment advisory services to high value clients. Proven success in managing multi-million-dollar portfolios, driving profitability, and increasing ROI through skillful strategic planning, client-centric consulting, and holistic financial advisory services.
Wow.
His career experience has allowed him to specialize in retirement planning, risk management, portfolio construction, and better understanding the expressed and hidden needs of high net worth clients.
Wow.
Again, let's give it up for Mitch.
All right, Mitch. Yes. Welcome.
How you doing today, sir?
I'm doing great. Thank you guys for having me. And I don't think that there's anything cooler than the intro that you guys started with.
I'm a little rusty, but that felt so warm.
But what Rodney forgot to include were, all these acronyms that are behind your name, sir. So I really want you to give people an intro and also kind of tell us about your certifications as well.
So I'm Mitchell Gatewood. I would like to think of myself as a wealth management advisor with over 12 years of experience. So I was actually licensed in 2012 with my Series 6 and 63, where I was a registered representative. So at this point in time in my career, where I've been able to broaden my scope is to be able to help clients acquire, grow, protect, or transfer their wealth in the most efficient way possible. And we do that by having a conversation that allows us to lead to opportunities to either help a client stay on track, create or establish a plan to get on track. Wow. Or, to say, hey, I'm glad that we bumped into each other today. We need to do the work that we need to do. So, we like to either say, hey, listen, we help you from that standpoint of acquiring, growing, protecting, or we work a process to help you get your financial house in order if it should need be.
Wow. That's a lot.
So I have my Series 7 and also my 66, and what that gives me the ability to do is actually offer brokerage services and also offer investment advice for a fee. Wow. I took it a step further and became a designee of the College for Financial Planning, where I obtained my Charter Retirement Planning Counselor designation, which is the CRPC, the Accredited Wealth Management Advisory designation, which is the AWMA. And then earlier this year, throughout the pandemic, I decided to kind of bore my way to success with the Accredited Portfolio Management Advisory designation. And that just basically encompassed to give me a certification and specialization in portfolio management.
Wow. Yeah.
Man.
So we got to, I'm going to clap it up for taking advantage of the time during the pandemic.
Absolutely.
But we do want to take it back. So
Mitch, where did you grow up? Where are you from? And what did you want to be when you were growing up?
So born and raised in Charlotte.
Unicorn.
Now Novant. Yeah. There aren't many people that were born and raised, educated, and still live here. So from Charlotte, went to Butler High School, as well as graduated from Independence High School in 2003 with some notable names like Chris Lee, Muhammad Nasser Quad, and also went to school with Hakeem Nicks, a Super Bowl winner. So just to kind of name drop a little bit.
That's cool.
And when I left high school, I didn't go the traditional route. I just, really for me, I didn't really know exactly what I wanted to do. I just know that I wanted to be an entrepreneur. I wanted to, basically work in some facet of business and, bring products to the marketplace. So I went to I actually attended King's College, which is more so like a vocational school or trade school, where I specialized in business administration and received my associate's degree. I later then attended North Carolina Central University for a spell, However, I ended up coming back to Charlotte and completing my education here.
Wow. That's pretty cool. Awesome. So what made you decide to go kind of that untraditional route? Was there like something where you were just kind of like, I wasn't ready for, 4-year university, or what kind of made you make that decision?
I think that from the standpoint, I was just undecided in the direction that I wanted to go in.
Yeah.
And for me, I thought it was more important for me to figure out exactly where my sites would be dedicated to, instead of going somewhere creating some debt for myself. And I mean, whether I don't know, it's yet to be seen if it's smart yet, Candace.
No, but it is.
It's very smart. It's very intelligent.
Yeah, because most time people go to school, they have no idea what they want to do. You in school for 3 years and be like, okay, I think I want to switch over.
and then it leads to a lot of people graduating, not even within their major, and just kind of miserable because you never kind of focus and honed in on what you truly wanted to do.
Correct. So, I mean, it was definitely a very unsettling time, not knowing exactly what you're targeted toward, what you want to concentrate on, and things of that nature. And after completing, after coming back to Charlotte from North Carolina Central University, I was able to take an opportunity with Sprint. They were merging with Nextel. I was able to actually work with their financial analyst division, where we went out and I stayed in New York for a spell, Indiana, and also Tennessee and California for about 2 months at a time, helping them launch other sites to cover, their merger.
Wow, that was pretty cool. So what was that experience like for you? Was that kind of your first taste in kind of that financial realm?
Correct. So we were tasked with basically the representatives that were in the sites. They were giving away more money than the company could deem to be profitable. So what they would do is they would fill out a form. I would be part of the group that would review whether or not the refund was actually a valid refund or not. And that put us in a position to help the company save about $14 million a year while I was there.
Oh, wow. That's big, Mitch. That is
really big. That was my introduction to, the financial services industry to so to speak.
Wow.
And so financial advising. So what was your introduction to that and how did you get into it?
I think that I walked around the block to get to the house next door. So again, while working with Sprint, I then received the opportunity to work for to Wachovia, which later became Wells Fargo.
Yeah.
Funny story about that. The day that I started working for Wachovia is the day that I'm waking up, ironing my clothes, and I see on the news Citibank is about to purchase Wachovia.
Wow.
Just right here down the road, they have a site that basically has a redundancy in terms of the same job that I do. So I'm like, I quit a job to join this job. Am I about to get fired?
Oh my God.
Wow. I had a really great training staff and leadership staff that said, hey, look, as of 10:01 a.m. as right now is business as usual. Let's dig in. And we went through the process, went through onboarding and whatnot, where I started out as a retail banking online agent. And we'll take phone calls. Hey, I can't get into my account. I have Quicken. It's not really working. It's not operational, et cetera, et cetera, et cetera. That led to an opportunity to work with the email division, where I would actually work in the same task. And after being there for maybe about 11 months, I went to a Christmas party with network with some individuals that were in the institutional retirement and trust with that bank at that point in time. And the great thing about that is that just talking to people, giving them an understanding of what my goals were, what my sites were. She really said, I had a great conversation with you. I think you actually make a great fit for my team. Would you be interested in coming over to the IRT? So that is where things really changed for me. And that was my introduction to to investments, to retirement, to, portfolio management, and overall just the whole scope of the realm that I'm working in now.
Wow. I mean, just kind of hearing that and hearing about like that networking opportunity by you going to the Christmas party, by you being, social,
Being open,
and just having those conversations about what is it that you want to do with your career, and what your goals were. I mean, that's very important. And I think that's something that everyone can kind of take with them is just, being very intentional about what it is that you want to do and communicating that.
It's just the aspect of always being ready and just kind of knowing what you want to do and knowing how to communicate that with people.
I think in my situation, although I didn't know exactly what I wanted to do, I was willing to do something. And that's what I always tell, anyone, like, hey, doing nothing is not an option. And also there's never a perfect time to, basically do something. You need to always, productivity sometimes is more important than, activity is more important than productivity at most times. You just need to be actively doing something. And, you also need a little bit of luck and some competence.
Man, I think some people probably gonna steal that quote. Doing nothing is not an option. You better copyright that one.
and getting that financial analyst role, like, what were some of the kind of hard lessons you had to learn coming in to begin with? I know that initially there are bumps in the roads and things you have to learn. So what's important? Yeah. What's some important advice that you may have for somebody younger getting into this industry?
That for me, that was my introduction. So I really didn't at that point in time know what I didn't know. What I would say the first thing you should do is, take advantage of the process that they paid someone millions of dollars to establish for the company, understand it and figure out how you can tailor it to replicate it very easily day in and day out. Right. I believe that really, human capital is something that you should probably, assess a lot more in terms of how you're dealing with people and what the motivations are. Because I don't believe that the work was ever as much of a hard task as it was to make sure that you're in alignment with the motivations of other people and they can also help you achieve your motivation. So, i.e., a lot of people like to do what they want to do.
Yeah, right.
And you get into corporate America and you have to follow these guidelines, and then you become the bad guy because you are trying to do your job. So the right thing. The biggest thing is to not have an ego, not go in and, there's a great book called A Title That Means Nothing. And some people lean on their titles so that it can justify their importance.
I say that all the time.
and really for me, I don't ever want to be in a position where I need my title to justify what I bring to the table. I need you to trust what we're doing and trust the process.
Wow. That was powerful. Can we take a moment of silence? Okay. We did a moment of silence for that one.
These words are hitting today. So I'm a client and I come to you for the first time. What does that initial consultation look like?
Okay. So the first thing is that, hey, Rodney, thank you so much for taking the time to come in. That you could have been anywhere in the world with things being so volatile right now. I wanted to see maybe first and foremost how we can benefit one another. Before I go into what I think and what I know and how I do things, what would be what is front of mind for you for the reason why you came in today?
Right.
And then at that point you say, hey, Mitch, I came in because I'm looking to buy a house, or I'm trying to establish a college 529 plan for my child, or, et cetera, et cetera. And then at that point, that will be the guiding light of how we get to why it would be beneficial for us to work together.
Okay. And so at like what age should people start to think about kind of retirement and kind of portfolio management?
As soon as you get a job. That's one of the things that when you look back and you say, hey, if I knew this then, I would, maybe not. Maybe you still would have, blown the money and done what you needed. But right now is the time that you should be thinking about doing those things, because you need to know your numbers. The things that are managed, that are measured, are managed.
Yeah.
And from the point that you get a job, you have to realize that you're either going to save for your future retirement or you're going to pay taxes. So if you present it that way, to say, hey, this money can either go to your future you, or you can go to Uncle Sam, which one would you choose?
Future.
I know. Future all day. Future all day. But that's a really good point, is that, you know, people do need to start to do this at a very early age.
Mm-hmm.
You know, because I know, like, whenever I was setting up my stuff at work, I'm like, man, like, this how much money I'm gonna need for retirement?
Mm-hmm.
Or, you know, do I really need this much money? But then you start to look at your monthly expenses, and then you think about inflation and so forth, and you're like, yeah, I probably do need this amount. So
absolutely. Well, 55% of Americans, that number is probably higher now, have more credit card debt than they have saved for retirement. Wow. So that's one thing. And then also 70% of people, regardless of what their station is in life, don't actually have financial conversations with their children. It's either because they don't want them to know exactly what their inheritance could be, or because they may not be as abreast or well suited to really have that conversation. So this is why you need to find someone that you actually can trust to have those types of meaningful conversations with.
Right. So just kind of talking about that. So I really want to dig into these certifications that you have, and just kind of talk through, like, you know, each one, what were some of the requirements for doing them. And I think another good point is for people to really have an understanding of FINRA as well, and, you know, how they kind of help manage all the regulations. So I'll turn it over to you to inform us.
So my 3 designations are through the College for Financial Planning, which is also known as Kaplan. They are a leader in the industry for licensing as well. There are many different individuals that have programs for licensing for, you know, registered representatives or financial advisors, but I chose Kaplan. I just like the way they establish their process, how their curriculum operated, and I've had success with it. So if it's not broken, don't fix it. And you know, not to plug them too hard, they should pay me for it.
They might send you a fee.
But for the Charter Retirement Planning Counselor designation, that is a deeper dive into retirement. So that talks to you about, you know, the different types of plans, whether it's an employer plan, whether it is a individual account that you would have yourself, like, you know, either a 401k, a 457, whether it would be an IRA, a Roth IRA. It talks you through all the rules, and then also talks to you about qualifications to be able to participate in such plans. One of the biggest things that I took away from the CRPC was, you know, just a greater understanding of Social Security and how that works. SSA.gov, actually, if you haven't, you should go online, establish an account, and see exactly what your payout would be for, you know, for retirement based on your current years of service. Because you actually need 10 years of service time to be able to qualify for Social Security. But there are also other benefits, like if you were to, for me and for planning, I talk to my wife and I say, hey, you know, knock on wood, outside of life insurance, if I were to pass away, these are the survivor benefits that you, as well as my children, will qualify for up to this family benefit maximum. That was a complete game changer for me. And it was more so from a planning standpoint. I was able to say, hey, I'm not saying you'll be rich, but you won't be on the street.
Right. Yeah. And I think that's a really good point too. Just to kind of start to have those conversations. But, you know, with that particular qualification, I mean, if you think about it, you know, everybody has to do it at some point, but having someone to help hold your hand and walk you through it, and like, hey, you know, these are some considerations that you need to put into place. I mean, that's cool. So what is that? Was it like a lot of studying, or was it like a course, or
So let's talk about how you do something like that. You would go online to their website. You would basically log on, create a user ID and password, and then you would call a phone number and you would enroll just like you would in any other type of college course.
Okay.
Once you enroll, there is a fee associated with it. Don't hold me to this. It's between $1,100 to $1,300.
Okay.
It's not too bad. Okay.
Don't let that scare you. When I thought about the shopping trips and the vacations and all the different things that I've taken, they've been insurmountable to that cost. And also it helps you become more marketable in the marketplace when you do have a certification or a specialization, excuse me, in that realm. So you talk to the nice people, they take your payment, and then they create a website for you. Well, then the curriculum, it takes you through every single step. Like, hey, there may be like 10 chapters, and those chapters will range from, what's an investment portfolio to Social Security basics, to even financial psychology.
Oh, wow.
A lot of psychology that goes into it, whether or not you have, anchoring, whether you have a type of bias, it gives a deep dive into what individuals are thinking when they're making these decisions, which really helps you identify who you're talking to and what their motivations are for coming to you. So let's say you read the chapter. Please read the first chapter in its entirety, because it will tell you, hey, Rodney, Candace, when you decide to do this, you will need to at least spend 90 hours on this.
Wow.
So for the APMA, it said you would need 180 hours.
Oh, wow.
This is not a range. This is not a strong suggestion. It's not that you need to time it, but it's just saying that based on these topics for mastery, for a level of mastery, this is the time that you're going to have to spend on it.
Wow.
So you read through the chapter, then there's a question bank.
Okay.
And you're able to take these questions over and over and over. So what you want to do is, to understand the material, not memorization of the question and the answers, you want to go through those questions until, for me, I did it until I could feasibly make 100 at least. So
that makes sense.
And that you go through every single one, and then there is a practice test that's just like the regular exam that you sit for. And if you can make a 90 or above on their practice exam, then you're ready for the real test.
Oh, wow.
Wow.
Yeah, I mean, that seems very intuitive. And, when you think about $1,300, think about what you spend a year at Starbucks. Starbucks, $5, $6 a pop, and this investment. So, I mean, I think that's great.
That's nothing better than investing in yourself.
Absolutely.
That's it.
And
so the next certification, you also have a AWMA, the Accredited Wealth Management Advisor.
Correct. So from that designation, that is solely targeted towards high net worth clients, and they have different needs than someone at below that level. From whether or not they have international properties that they own, the risk management or liability associated with having that level of wealth, and having a Super Bowl party, and one of the kids one of the parents, their kid falls down your steps. What does that look like for you? Will they sue you for that? It really takes a deeper dive on, one, you have this money. What are your thoughts and needs at being at this level? What are the protection limits that you need to consider? You need to consider above and beyond maybe life insurance and personal insurance. It talks deeply about what an umbrella policy is, which goes above and beyond what your personal insurance limits and coverages provide for you. And then last but not least, it talks about, how do you transfer wealth appropriately? Who's going to get this money? How will they utilize this money? When will they get this money? And then also the creation of, trusts.
Oh, okay. Wow, I worry about somebody falling in my backyard. I mean, my little small backyard. I mean, if you fall, you're done. So
it could be an opportunity for me to come over this weekend.
No. Look, we'll fall down our own heels.
Exactly.
So I do have a question for you. So you've been in the industry for around roughly 12 years now.
Mm-hmm.
And so what are some of the changes that you've seen the industry go through, and especially during COVID?
That's a good question.
Well, the industry for me has changed drastically ever since I've been in it. So I entered the financial industry in 2008, which we all know that was the Great Recession.
Yeah.
Right.
So I was in. I actually also became a financial advisor on the heels of DOL, which is basically establishing rules and regulations around doing things that are in the best interest of clients.
Right.
That was deemed to overstep to a degree. Therefore, it was actually stricken down. And now there is like the SEC best interest rule, which is in place now, which brings in additional, things that you have to do to ensure that you're justifying what you're doing for clients and why you're doing it, that your motivations are not set ahead of theirs. So really there's a lot of this is a highly regulated industry in itself. There is, with that, there came an additional oversight and additional scrutiny because, the issue is that everyone's not doing the right thing, regretfully.
Yeah.
Right. And when you are doing the right thing, then it puts you in a position where this is an easy form to fill out when I have to fill out the big form, which we call the best interest contract, and ensuring that, hey, when I sit down with you and I talk to you about what capacity am I operating in, am I operating as a broker or am I operating as a fiduciary? And the difference between these are two different standards. The suitability standard is that, is this suitable for you? Does this make sense based on the time horizon in which you want to invest? Does it fit into your risk comfort zone or risk tolerance? I like to try to stay away from jargon, your risk comfort zone. And then also, what are your expected outcomes? Not that I'm promising you anything, because past performance is not indicative of future performance, but is this risk reward ratio working out for you? And now the fiduciary standard is that I'm financially and legally responsible for any advice that I provide to you today.
Right.
And most individuals want to work with a fiduciary for that point.
That was good, because I didn't know the difference.
I did not know the difference. You
just educated me.
I did not know the difference at all. So let me ask you a question. So you mentioned just kind of sitting down with your client. How often do you meet with your clients and make kind of changes to their portfolio and just kind of, in general, speaking with them and just keeping up with what's going on?
So after we establish that, hey, we're going to work together, Rodney and Candace, this is what your investment portfolio will look like. This is how we execute it. Then at that point, I have a client engagement strategy. How do you want to be engaged? What's the most appropriate method? Does phone work for you? Does email work for you? You're not able to text unless it's directly through a in-house system, because any communication with clients need to be recorded with the compliance group. So then at that point, it really also depends on what type of investment strategy that we have. If it's something more complex, then for some of those clients, we meet quarterly. And, we may say, hey, within the first year, we're definitely meeting quarterly. But hey, Rodney and Candace, for meetings 1 and 3, they were the most effective. 2 and 4, they were kind of touch points. Yeah. Do you feel like it would be appropriate for us maybe to cycle back from 4 to 2? Or are you comfortable? Are you like, hey, no, Mitch, you know what? I actually, it's hard for me to not look at my account every single day. So what I would like to do is I like to.
I can't wait till I get that on Mitch. You might be like, I'll see y'all one time a year. We can do Skype.
And for that, also as a financial advisor, I have control over that as well. Right. Like, hey, we've invested in a fixed annuity. This is basically relative to a CD. We put this money in, the interest is credited at the end of the year. There's not going to be any fluctuations of volatility with this type of product. Right. We need to speak on an as needed basis. Now you have an emergency, something comes up, or you have something that you want to talk about and discuss that maybe I have a purview on. That's totally fine. But we can't pull your account up every Thursday. It hasn't changed.
I can assure you, nothing has changed. Nothing.
December 31st, we can talk.
But that's a really good point, though. Kind of talking about structured products, unstructured products, and the different types. So, there's a lot out here, people, that when it goes into investing. So, it's always good to go to a professional and, let them help guide you on what's needed and what works best for your situation. And I would just have to say, you know, Mitch, just talking to you today, the information that you're giving. So, you know, you're also educating people as they're going through this process. And I think that's the most important thing, especially when you're making decisions about, you know, about retirement, when you're thinking about wealth, when you're thinking about your kids, when you're thinking about your future, is to have someone that you can trust, that's going to explain everything to you.
Right.
I know that's how I am.
Same here. Mitch, I got a quote. I got a quote for you, and I just want you to explain it. Okay. Innovation is praise, but execution is worship.
Absolutely. So that came from one of the influences of my life, which is Dr. Eric Thomas, also known as a hip hop preacher. And, you know, the shift in my life when I heard him speak and talk about you have to want to succeed as bad as you want to breathe. And he said that innovation is praise, but execution is worship. You know, doing something well and coming up with a great idea is amazing. But if you don't ever get to implementation and also a seamless implementation where you can replicate it and do it over and over very easily, then the reason why I feel that I've been, you know, as successful as I've been is that I wasn't afraid to just try and do something. I was more afraid of not succeeding than I was a failure, because at least I tried. I got the experience. Right. So I got knocked down, but I got back up. So innovation is praise is that having an idea is amazing. It could be $1 billion idea that the world will never get to see because you never got up and did anything about it.
Wow. Man. That was powerful. That was powerful. That was really powerful.
Wow.
I mean, some of the best ideas are the ones that we never hear about.
Because you're too afraid to actually take that chance.
Yeah.
And you never know until you actually get out there and take that chance to experience it. See whether it's for you or not.
See if it happens. Yeah. So, Mitch, what other words of advice do you have for the people?
I think that another thing that we brought up was, you know, from a portfolio standpoint, what works for me. So this isn't advice because I don't know your situation, what your goals are. However, when you think about structuring a portfolio, you have to think about what is your risk tolerance, what's your risk comfort zone. If you turn on CNBC and you see the market's down 500 or 700 points, the Dow Jones is down 700 points. What happens to you? Do you panic? Do you say sell me out of everything? Or do you have a structured plan? So when you're thinking about the types of risk tolerance levels, you have conservative. That's someone that I'm completely risk averse, Candace. I don't want to lose $1, Rodney. If I lose $1, it's going to keep me up at night. I'm not going to be able to sleep. Then you have moderate risk, right? That's where, you know what, I'm open to some exposure into equities or stocks, something that can give me the opportunity to gain more. You know, and however, if it goes down this much, my stop loss limit, then I want to get out of it. That's also a very dangerous perspective or approach to take as well, because things work out the best when people make a commitment and they stick to it.
Right.
True.
But anything you do, you know, marriage is also one of them. Yeah. Every day is not a market day.
Sometimes the Dow is down.
The arrow is pointing down today. How do I get it back up?
Stock market crash. What are we gonna do now?
So we're not telling anyone to don't sell out of your marriage. Please stay in it.
Take it out.
And then you have the aggressive approach. And those approaches can be far conservative. It can be a 30-70 where you have 30% in stocks and 70% in fixed income. That's going to be bonds. That's going to be cash equivalents. You can have a 50-50 approach. That's more so going to be a moderate strategy where you have 50% in stocks and you have 50% in fixed income or cash equivalents. And then when you start getting to the aggressive arenas, that's when you start looking at an 80-20. 80% of your portfolio in stocks and equities, and then 20% in the fixed income or cash equivalents. Or if you're really aggressive like I am, I'm high risk. You know, I'm gonna be here hopefully, God will, I'm gonna be here for a while. So my portfolio would either be 100% equities or 90-10, 90% equities, 10% However, here's the thing: when you're establishing your strategy for your investment portfolio, I like I call this process DM, and the D is for discovery. Today, we're going to learn more about you and your situation, your family, your occupation, your recreation, and your money. You know, if I've stopped talking long enough, Rodney, then at that point, I should be able to come back to the table with some ideas that will help you, that has helped other individuals in a similar situation. And then the E is for execution, of course. Innovation is praise, execution is worship. How we can, it's great to come in here and learn about you, let you prove to you that I'm really smart and give you these great ideas. How do we translate this to execution so that we can do this? We can package this for you in a way that's palatable for you. Right. And the M is for monitor. This isn't a here today, gone tomorrow type of scenario. That we're going to have a client engagement strategy where we touch base, because you know what? As we continue to go through this process, we'll still need to discover new things. We'll still need to provide new ideas. We'll still need to execute on them, and we'll still need to keep in touch. And then after we go through DM, we then establish a strategy. I like to call it your castle. And what I do is I draw a bucket, and I say this bucket represents your wealth. Now, income comes into this bucket, Candace, and that's going to be your income from your job. Now, there's a hole in this bucket, big or small. And those are going to be your bills and expenses.
Yeah.
Now, what you know is that you have your income coming in, you have your bills and expenses coming out. Your money doesn't just stay in this bucket. It crosses a continuum into 5 specific places that we'll talk about in detail. And the first one would be your emergency fund. That's going to be anything. That's going to be at least 6 to 12 months of your disposable income needs. So then if something happens, knock on wood, unfortunate event like loss of job or a flat tire, something like that, you have a directive, you have a place.
Right.
Yep.
That second bucket is going to be major purchases. The real estate market is very hot right now. We do not want your money for your new mortgage or for your down payment to be commingled with your emergency funds, right? So is there a new car? Is there a new house? Is there a large purchase? And for me, I would deem a large purchase anything $5,000 or more. That's enough to get me right. So then I like to think that there's an imaginary line between 1 and 2, buckets 1 and 2, and then 3 and 5.
Yeah.
Because on this side, we want safety, right? Because this money is needed in the event of an emergency or for a situation that's going to come very soon. So then the third bucket, we're looking for risk comfort zone and maximum return. So how can we most people have more money allocated to emergency and conservative portions of their overall portfolio, and now they need their money to work harder and smarter for them. So now the third bucket is the intermediate bucket. Now, based on your risk comfort zone and risk tolerance, we'll put it into either a portfolio, a risk averse strategy, depending on what your individual situation is. The fourth bucket will be your nest egg, and this is going to be retirement based, a 401k. And this isn't me looking to figure out how I can help manage your 401k or how I can, take ownership and over some of those different things. This money is going to supplement your income. So this is going to help you put money back into that bucket once you decide to say, hey, ABC company, thank you. It's been great. I'm going home.
Right.
And then the fifth and final bucket would be your legacy bucket. This is what we like to call never money. This is money that's either going to protect your life, like a life insurance policy, or it's going to be a college savings fund, or it's going to be money that you decide that you're going to leave to, to a church or charity or something like that, any type of charitable giving. So what we like to do, the reason why we call it your castle is because we want to structure a plan that will allow you to create a moat around it, because there are barbarians that are always trying to attack and penetrate your castle. And they're called taxes, healthcare, and our own behavior. And we'll take a deep dive into what those barbarians have done in your life to date and how we keep them out.
Hey, Mitch, man, look, I want you to drop your information so people can make an appointment with you.
Yes.
So we can get deep into the moat and talk about this moat.
Okay, absolutely.
Where can people find you?
So I'm on LinkedIn as Mitchell Gatewood. As a financial professional. I'm actually transitioning right now within roles right now. So you'll be able to locate me from there. mgatewood0985 is my Gmail account. And then also for my professional email that will be coming soon and be updated on my LinkedIn.
Okay,
cool.
perfect.
Sounds good. And I do have a question for you.
Sure.
So within the next couple of years, where do you see yourself in the financial service industry?
For me, I'm actually taking time to broaden my scope on executive leadership.
Hmm.
Where I've actually worked in the field for a great deal of time, and I believe that being a part of the decision making committee or group would actually be beneficial to the industry as
Right.
well as to any institution that will have me on once I've developed myself.
That's
So
awesome.
right now, I'm just taking the time to develop myself professionally so that I can move into leadership.
Wow,
That's
that's
awesome. Man, that's awesome,
awesome.
man. That's
Yeah,
awesome.
that's the way to go. I mean, you have so much experience and so much knowledge that you've acquired, over the course of your career. Having that strong starting point and just kind of continue to progress, continuing to get your certifications, and even in the midst of this pandemic, really taking advantage of what was available to you. And I mean, that just says a lot about you, and you're gonna do great things. I can't wait.
So yeah, one last thing is that I am currently working on the coursework for the CFP because that is the gold standard for this industry.
Nice.
So yeah, that was the last thing. So yeah, no, I appreciate you guys, having me, and thank you for the opportunity to kind of just share what I know.
Yeah,
Gotcha.
I'm just so glad to have you. I'm just so glad. I'm gonna go back and listen to this castle because I'm like, I need to make sure that my castle, I got step one, the nest egg,
number 2. We got 1 and 2.
emergency fund,
And
401ks.
And now we got to get 3 and 4.
Yeah.
We got to get 3 and 4 done.
Yeah.
And then we need to fight away 1 and
Right.
2. 3 we all right with, but 1 and 2 we got to fight.
And we plan on contacting you once we get to AWMA level. In case anybody doesn't remember, that's accredited wealth management, because that's where our future is going. Wealth.
And just like the untraditional path that I took, not having all the buckets filled should not be a reason where you should not start. So just know doing nothing is not an option. Sometimes activity outweighs productivity. So do something and identify the places.
Well, guys, look, thank you so much for tuning in.
We gotta have Mitch come back again.
Cohort 1986. And we want to thank Mitch for just kind of giving his knowledge to us.
Yeah.
And just encouraging us to check into that financial advisor.
To think about your future.
Think about your future and your wealth and what legacy that you're leaving your kids.
Yeah. Yeah. So, Ronnie, where can people find us?
You can find us on cohort1986.com. We are on Facebook, Instagram, YouTube, maybe one day TikTok.
Yeah.
Yeah. We're looking for those interns to do TikTok because I don't know how to do it.
If anybody wants to intern, please contact us. We have room. We would like QR codes and all the cool stuff that everybody's doing. So
and then before we leave, Mitch, one more time, just plug where people can find you.
You can find me on LinkedIn at Mitchell Gatewood, CRPC, AWMA, and APMA. Also, mgatewood0985 at Gmail is my direct personal email. I'm actually transitioning right now to a new role, so my professional email will be coming soon as well. You'll be able to see that as well.
Nice.
And thank you guys so very much for having me.
Yeah, thank you, Mitch. And so Mitch's information will be on our website, guys. And if you guys need to get in contact with him, DM us, we'll connect you, via email or, whatever it is that you need. But I would want to encourage everyone, like Mitch said, I just wrote it down, doing nothing is not an option. And your future is in your hands. It's in your hands, guys.
Couldn't have said it any better. Guys, thank you for watching and hope you have a wonderful day.
Yes. Bye, guys.
Bye.